All right. Good morning, everybody. Hope you guys are having yourselves a fantastic start to the AM here. Happy Wednesday, right? It is Wednesday. Hope you guys are doing well. Couple things for us to go over here as we kind of get closer towards weekend and sort of the long weekend, right, and quarter end. So obviously, right, first things first, markets are closed on Friday for a U.S. holiday. I think it's Good Friday. So everything is going to be shut down then. And there's not going to be any U.S. equity markets that will be open. And then obviously, right, we also have month end and quarter end coming up at that same time. So the base expectation here, right, is that at some point we're going to get a little bit of a bouncing trade that occurs, and maybe we can see a little bit of that volume showing up as we get that sort of end of month positioning going. Now, if that is the case, right, we're still essentially looking for a formal resolution of some of the consolidation that we've essentially seen here so far this week, right? So we've kind of identified a little bit of a bull flag on the index level, and we're not really seeing a breakout above or a breakdown under, and we're essentially chopping about or consolidating here in a relatively low volume environment. So today, right, we're still looking to essentially establish that first indication of trending price action for the week. And we want to see momentum step back in that continues to exceed the standards that we've sort of established here so far. So those Thursday volume standards, right, post FOMC is still kind of the momentum that we'd like to see or expect to see show up here at some point, especially if we're going to say that we have trending price action prior to sort of the long weekend. And so my hope here, or sort of what I'm cheering for, is that we can get a version of that price action. Now, short term, still think that the long-term, my long-term bias, right, is bullish, and it seems like we have an uptrend. So I have more of a, we'll call it aggression, right, or more of a desire to be pushing more to the upside here, and like to get either dip buys within that context or nice breakouts that would definitely set things up well. So with that sort of preamble out of the way, let's kind of get started here and figure out what we want to do. So good morning, Suresh, Craig, Gabe, Steven, Igor, Salstein, Greg, John, and Dayon. Hope you guys are all having yourselves a fantastic morning. And yeah, well, let's kind of get after it here a little bit this AM. All right, so first things first, right? Start with the economic calendar. Make sure we're not seeing anything too crazy here. Hey, Brian, how you doing? So, okay, we got some Fed speak here later this evening, 6 p.m. So relatively clear calendar for us here this morning. So we can start to map things out here and still look for some narratives. Now, yesterday we had a 2 out of 3 with volume to the downside. But with volume is with a huge asterisk, right? So we didn't get a more impressive volume standard than what we wanted to establish, right? AKA larger than Thursday. So we're not really going to put too much credit into that volume profile. It doesn't really tell us that bears are in control within sort of the context of, say, the last week's worth of price action. So today, I'm really looking for a high value or high volume confirmation to occur on a breakout over or under on bigger volume than what I saw on Thursday. If I don't see that standard, then I don't really have too much indication that I'm going to get a indication, or a, shouldn't say indication twice there, but I'm going to get consistent follow through here on this trend. So the hope essentially is that this bull flag can turn into a little bit either of a momentum creator here to the upside, or right, we can look for weak pullbacks or aggressive breakdowns here as we maybe start to lose some of like those like 5250 areas. So high volume conditions here, aggressive momentum could establish the trend. My bias is still to the upside, but we definitely could play this in either direction. If we do get it to the downside here this morning, I'm probably going to size down just a little bit, because we're not seeing that really sustain or seeing that end up being like the smoothest price action here recently. So let's see if we can get a bull flag that'll be a little bit smoother for me this morning. Okay, sorry. So just in my notes, right, putting, if I'm going to be trading bearish setups here on the ES, I'm going to be trading them with smaller size this morning. Okay. QQQ, I mean, starting to look like a flag now as well, right? So at this point, I'd rather see just a resolution here. Still that 450 area that it needs to break out from. And that Thursday standard continues to be the point where we've established at least a decent amount of resistance. So let's see if we can, yeah, just basically overcome either that price or overcome that volume. We're not really close to doing either here in the short term. Okay, Apple has kind of been gross to trade here for a little bit. Inside bar, increasing volume. Generally not the combo you want to see on an inside bar. What would we say, or what would be confusing about this inside bar on increasing volume? What does that, like, what's the story tell us there? And good morning to everyone who's listening in on Twitter Spaces. Thank you very much for tuning in. Hope you guys are having yourselves a great morning here too. Not really, Brian. I've got a very similar setup with the flag, and so I don't really have a opening range or a B breakout strategy here set up for this. So I'm more looking for a resolution of this pattern clearly before I'm willing to trade it. With ES, I'm willing to be a little bit more flexible because I've back tested it and I have that kind of data. I don't have that information here as clearly on QQQ. So that's sort of a project maybe for this weekend. But that would be, that's my reason, right? So I have less evidence here. So I'm going to be less aggressive and just look for the clearer resolution. No, and you don't have to apologize about going back, man. Happy to answer those questions. Okay, so Apple, right? Inside bar on increasing volume is confusing because if the volume was actually strong or we had stronger bears than bulls there yesterday, why weren't they able to make lower lows, right? Why were they still confined within the previous day's price action? So it's kind of a confusing story, right? If we're seeing increasing strength or increasing momentum, how often do we actually see then that we have one side that's really in control here, right? Because if that volume was actually as strong as it's suggesting, why weren't we able to make those lower lows, right? Why weren't we able to get that breakout? So it's a little bit of a trap here, I would say, or a little bit of an indication that that volume profile is misleading at the very least. And so we'd like to think that we could possibly trade a breakout here up and over, but we would still need to create a volume standard that is significantly greater than anything that we saw there yesterday. So a 172 breakout, on this inside bar could be in play, or a 168.50 breakdown could be in play here this morning. But again, I'm kind of going back to last week's vol standard, right? So if I could get back up towards like Friday's, right, volume kind of in that area, then maybe I have an easy path here in either direction. But it just feels gross, right? High volume consolidation or high volume confined price action generally makes me feel a little bit like it's a tug of war versus one side kind of clearly giving up. So I want to see maybe the scenario, right, or the tradable outcome will occur on sort of a fake out first. So we almost want to see like bulls fail or bears fail prior to us getting a breakout from that inside bar, because that could almost like release that pressure valve of that increasing volume inside that consolidation. So that's a lot to go through there. But yeah, I'm going to say it's an inside bar. So we're looking for a breakout in either direction, and ideally a breakout after the other side has failed. And that failure can occur in two ways. So we either do like a fake out on like one direction, right? So we see like a green to red fake out or a red to green reversal, something along those lines. Or we see a more impressive volume standard than, say, anything we've seen here so far this week. Hey, Brian, how you doing? So like, Brian, go back, right? We don't have a short setup here on QQQ, but we do have one here on Apple. So if we do get kind of downside momentum on the index level, we can hopefully play this setup and kind of it rhyming, right, to a certain extent. Now, full disclosure, right, I still have my swing position here in this. And so my bias is more to the upside than it is to the downside. I would prefer to see a 172 breakout versus a 168.50 breakdown. But I'll be happy to trade this in either direction. So QQQ today, right? We're going to treat it like a proxy versus treating it like the name to trade. So we'll almost view it like an indicator versus it being, yeah, basically what we focus on. Does that make sense? And then above 172, we're kind of going 173 is that next point of contact, then 174. I think we should go, honestly, buck along the way towards 180. I don't think we're going to get to 180 here today. I would be surprised. I would be stoked, but I would be surprised. And then to the downside, right, under 168.50. We're starting to target down towards, call it 165.50, and then like 160-ish. So I'm going to go dollar along the way towards on the 50s, right? So if, my starting breakdown spot here is under 168.50. Next target then is 167.50, 166.50, right? Then that low we identified, right, was 165.50. So we're going to call it that. And then from there, we can start to maybe even this out a little bit. So then we'll call it 165, 164, 163, 162, 161. Normally, right, I do round up to, or round down to the nearest number. But in this circumstance, right, I've got evidence of there at least being a couple spots where that 50 area would act like as a reasonable support and resistance zone, right? So we've got a few little like called dabbles, right, in and around that range where I can think that it's realistic that the resistance is in sort of between the round numbers. So normally, right, I tend to round it up or round it down. In this context, I have enough evidence to suggest that price action can move $1 along the way from that 168.50 that I don't need to round it in this context. All right. Tesla. Big volume yesterday, but a rejection. Looks like it needs to get up and over 185, I guess, at this point. Let's get rid of this. So I think here, right, we have 3 points of contact now on an upper trend line here on Tesla, right? Give or take 3 points of contact. So draw your trend line, right? Bearish trend from Thursday, right? December 28th. And then next point of contact, right? End of February. And then yesterday. Hey, Jay, how you doing? As sort of your points of contact for bearish resistance. If we're going to get a breakout here up and over, I would like to see that trend line, previous resistance now turn into support and see pretty impressive momentum through that barrier. To the downside here, right, you could look for rejections essentially now off of this trend line back down towards sort of that 160 shelf. But at this point, I would say that you're maybe selling a little bit low here, which could make this a little bit more challenging to get that immediate follow through. But with this high volume shelf, right, it's a 2 out of 3 with volume and 2 out of 3 with volume that's outlier. So maybe not impossible, but it's challenging to think that we're going to get bigger volume than what we saw there yesterday here today. And so it seems like bears are relatively in control. That means that we could look for like Bollinger Band reversal type setups here in these highs, green to red reversals, fake outs and then breakdowns, MA crosses, or even look to fill that gap from yesterday's lows, right, or even give or take yesterday's open down towards sort of that like 175 area. So we've got a potential trend line here I would like to see a little bit of a smoother or more formal reaction or rejection and then separation away from that zone. And then if we do have that, we certainly have a really impressive volume shelf here that could sustain us in either direction. So yeah, like Tesla, it's got a little bit of intraday volatility we could look out for. But really just want to make sure that I get a little bit of resolution. Opening up middle of that candles range is the thing that slows me down here the most, right? Where we're opening up essentially right in the smack dab between yesterday's low and high. So it just might be a day of consolidation here, a day of catching its breath before it decides to give us separation away from that trend line. So today, if I can get a 185 breakout, it would have to be on bigger vol than yesterday. And not really into this today, right? I don't need to write that down, but 2 out of 3, right, with volume, I have maybe an indication that bears are in control here more than bulls. So I don't want to front run that reversal here too aggressively unless I see compelling evidence to do so. Weak higher highs would not be enough. And then we're going to call this like a trend line rejection. Cool. Okay, Microsoft, not quite an inside bar there yesterday, but not far from it. Decreasing volume. I'm still going to hang out on this. It's not worth it. Meta opening up middle of yesterday's candles range. Again, I don't think this is worth it yet. Okay, Amazon inside bar. Decreasing volume, but barely. Pretty decent sized gap up. Just under 180 this AM too. That 180, 150, I can't unsee. You have kind of 2 rejections at that spot, so I'd like to see that turn into essentially support, but if it can, that looks pretty sharp. So yeah, I'm going to say this inside bar breakout here, looking for a consolidation breakout. And then 180, 150, we've got this mapped out all the way towards 190. That looks fine. So I'll add it to the upside so far, right? Today we got ES, either direction, but smaller if we go bearish. Apple, Tesla, and Amazon. AMD, inside bar, decreasing volume. Maybe a gap, maybe you found a short-term bottom here on AMD. Yeah, inside bar tells us consolidation. So what that means is that the candle didn't make a higher high or make a lower low, and all of the day's price action was sort of confined within the previous bar's kind of range. So what it tells us is that bulls or bears kind of caught their breath and weren't able to give us any breakouts from within that price action. So the expectation here is that when you do then get a breakout from that spot, should be an area where you see enthusiasm step back in. So an inside bar essentially tells us consolidation or no short-term trending price action, and you need to see a trend get established before you're willing to trade it. If you go into the trading docs, there's like a strategy cheat sheet, and it's, I don't know, 13 or 14 pages long. And what it does there is it has a pretty intricate breakdown of sort of all the pre-market conditions and what they all mean, and sort of the confirmation standard for all of those kind of conditions. So I'd maybe spend a little bit of time taking a look at that or reading that a little bit, as that's sort of the foundation of what we sort of build off of in here. Okay, so AMD, we're going to call this an inside bar. Yeah, biggest vol of the week, fine. Needs to be a pop over 183. Or it'd be a breakdown right under 171. 171 breakdown, too far for me this morning, so I'm just going to stick to the bullish bias here. Okay, 186, 187, and this thing moves fast. Okay. Again, I would prefer to see basically the leading names that we've seen show us some momentum here over the last little bit, right, have been names like Google, AMD, NVIDIA, some of the chip makers, right, a few of those other types of tickers. So if we do have a bullish bias here at this AM, it'd be nice to maybe see those previous leaders continue to rebound with some strength. If they could start to break out again and they could start to push higher, then I think that would give us a little bit more support to then get that bull breakout on the index level. So if we can see that volume show up here, definitely could set up something for us, but we do want to be a little bit cautious and a little bit patient. We don't have to force something if the volume doesn't show. All right, NVIDIA, less interesting. Looks like a possible double top. Bearish engulfing candle, but not bearish engulfing on volume. So this could look like a little bit of a fake out in my eyes. Right, maybe that's like your trend line. I'm going to sit this one out, not for me. Netflix wedging, but not the greatest looking candle. Maybe like an ascending wedge. 2 out of 3, indecisive. I don't like that it couldn't hold above that weak bearish candle. That's a little bit disappointing. So yeah, Netflix would have to break out and hold those higher highs here at some point prior to me having too much conviction in this idea. Okay, Google. A little bit of a fake out there yesterday. So next point of contact is like 153-ish. It's a weak 3 for 3, right? So it's trending, but it's not like the best version of trending. Call 152.50. And then that next high, okay, we'll call that 153.50. Okay. Yeah, cool. So yeah, I mean, look, it gave us a breakout, on a little bit of volume, but it's also in a spot where we've seen price action basically reject and fail before. So would it be surprising to see this melt back down towards and maybe hug that 150 barrier on the A class? So let's see if it can give us some oomph before it does so. But yeah, I mean, it could be in play. Certainly been a nice little uptrend here for the last little bit. So it would be great to see a further continuation. And yeah, let's see if it has that joy. But in general here, team, right, we're still looking for a lot of that same narrative like we've been looking for here so far this week, right? We don't think we have a indication of a trending market here yet. And we're looking for that trend to establish itself or create itself, right, prior to forcing anything here this morning. So if I get any bullish setups, right, I'll be focusing on like an ES, Apple, Tesla, or not Apple, Tesla, ES, Amazon, right, a Google, right, an AMD. Those sort of names will give me good momentum. And if I see everything else cracking, then I'm going to want to basically fade the names that have been showing me relative strength here to the downside. So if that's like an Apple here lower, fine, so be it. But really going to judge the strength and the probability essentially of these trends with high volume conditions. So if I see big volume show up, then I can be a little bit more aggressive and I can be a little bit more willing to take on some risk. But if I don't see a good amount of momentum here, then the base expectation is that today we chop about and sit on hands until that occurs, right? It's okay that we don't get a ton of action here right now, or we don't always have to force a ton of trades. There's going to be periods where we are busy and periods where we are quieter. And it's honestly up to us to basically just make sure that we don't sabotage ourselves when things are quiet, and we don't talk ourselves out of trades when things are busy. So right now, we need to be very careful in defining what are going to be the conditions that we're willing to accept to engage this market. And then everything else, we essentially can't fall for. It's going to be like a honeypot. So the goal here this morning, right, is focus on the variables I can't control. Wait for those volume profiles to show up that indicate we've got something different than what we've seen here so far this week. And then if I do get all of those narratives, I should have a bit of joy out there here this AM. DTR members, I made a few changes right to the alerts. We got so many false ones there yesterday, so hopefully that gets sorted out. Where we're only going to see alerts now on the candle close. It's not going to issue the alert on any price breach under the opening range. Hopefully that should make it a little bit simpler and less clutter-free. So glad that we could be able to test that out yesterday. But that's it, guys. If you have any tickers that you're looking at or any names that you want to go over, we got a couple minutes here, so let's fire away and pop them in the chat. But otherwise, let's get ready for a big trading day. Hey, Abraham, how you doing? Have you got that trade copier to work yet? All right, guys. Well, if no further questions, then I appreciate you tuning in. We'll do another pre-market prep here tomorrow AM, starting at 9. That'll be the last trading day of the week. So hopefully we can get ourselves a strong setup or two at that point. Otherwise, have yourselves a great rest of the trading day, and I'll see you tomorrow. All right, DTR members, we got 2 minutes here till market open. So let's get ready to absolutely crush it. Hopefully, right, we can see a little bit of momentum show up here this morning, and we see a little bit of action kind of come together. Institutionally, right, today would be the day where, you know, if I had some work to do prior to a long weekend, this would be kind of my buckle up day and get shit done, right? Whereas on tomorrow, right, maybe starting to dream a little bit about what I'm doing on Friday and Saturday. So hopefully, right, we can get some good momentum showing up here today, see some good enthusiasm in the market. And if we can, hopefully we can get ourselves then an A+ setup or two to take advantage of. It'd be really nice to get a good look, but I'm not going to allow choppy or slow conditions to trick me into doing something I'm not interested in. We got to see a trend, we got to see a nice market, and we got to see aggressive volume that indicates that we have bullish control. So let's get after it here, guys. Let's have ourselves a lot of fun. And yeah, well, let's absolutely crush today's session. All right, so that's market open, guys. Let's see how we behave here this AM. Okay, pretty tight range here, opening minute, right? Only 3-ish points. So let's see where it is. Any questions about any of the names we're looking at here this morning, team? Anything, yeah, anything you guys want to go over? Everyone's clear, yeah? Okay, pretty low volume opening 3 minutes on Apple. I'm gonna bite my tongue a little bit, but it kind of feels like the reversal spot here. My objective though, guys, right? Not to catch or try to call tops and bottoms on a 1-min time frame. It's not gonna work out here long term. If the setup is actually strong, then a 3-point breakout here, not exactly something that we need to be too worried about here, right? It's a pretty tight range, pretty limited amount of volatility. We should be able to get pretty tight stops if we do get clean price action here. Just can't front run it. We can't force it. We can't trade our opinion. We want to trade our system, right? We can trade our opinion, but we can't trust our opinion in market hours. So it's basically like, okay, I've got evidence that this works. I've got evidence that that works. And then when I don't have the pressure, right, to make those decisions, then I can start to form opinions based on data and facts and start to kind of change my thinking. But trying to do that intraday just gives blinders, because you tend to focus in on something that isn't there and maybe overthink price action. So really tight 3-point range here to open the day off should mean that if we do get a setup, it won't be that challenging for it to occur. And let's just see if we can establish that clean PA here this morning. Hey Nate, how you doing? Boom, I would have been wrong, right? So why we don't trade our feelings, right? We trade our system, we trade our plan. My job, right, pretty much as a trader, is to avoid my obvious mistakes. And most of my obvious mistakes occur when I make like an impulsive decision, right? So when I take a trade where it's unplanned or it's against my system or it's with bigger risk than I'm supposed to take, all of a sudden that mistake creates anxiety and that anxiety compounds into basically making a mistake further on in the trade, right? So many times it's something like averaging down or ignoring a stop loss or not taking a profit when it's there. So that's why we have to focus on, yeah, basically not screwing ourselves, right? At the first chance we get, or just chasing every feeling we get, generally is not in our best interests. And okay, right, if I'm consistently wrong, but my technique is the same, or I do the same process on a day-to-day basis, then at least I'll know what I need to fix, right? But if I'm trading a feeling or I'm trading a gut reaction or something along those lines, it's very hard for me to go back and think about, hey, this is how I felt in that moment. This is what my gut was telling me. Like, it's hard to almost like use those emotions as facts, right? Or it's hard to create those into facts. So we can't fall for that lure. At least I can't. I don't have the zone of focus where I can take 100 trades in a day and still be sharp. Not like this. Not when you're taking on risk. So let's see. Maybe short-term bottom here. Well, we need confirmation, and we don't have an active setup here, right? So let's wait. So far, no false alerts, which is nice to see. So what would be a setup trigger here, team? What would be our setup trigger? Inside bar there, right? Yo, let's go, Suresh. 250 points, my man. Let's go. Congratulations, dude. Yeah, spot on, Igor, right? So right now we're essentially consolidating inside that ORB. And we're going to be looking for a breakout either above, right, which will be the, call it 52.94, or a breakdown under 52.90 and a quarter. And it's got to be on increasing volume from a candle that opens up inside a range and where its highs and lows isn't larger than the range. So a few little variables will be visual to us, or visible to us when it comes together. Just hanging out watching, right? We're at least a minute away from some confirmation. So we're waiting. I'm not forcing anything. I'm not rushing anything. I'm not doing anything silly. I don't think we're going to get the volume standard I want here. At least not convinced. I might. Might not. Okay, so no setup, confirmation, etc. Is that double inside bar? Not quite. A little fake out lower. Not exactly enthusiastic price action here yet. So waiting, right, guys, for that clean PA. Let's see. Okay, so there goes Apple. Let's see. 172. Here we go. I mean, this volume sucks. Am I seeing this right? That opening volume's pathetic. What the? So still waiting, right? Still waiting for a setup. Oh, Nate, it's been the last 2.5 weeks, I think, have kind of been like that. Like that March 8th, it's stuck in or imprinted in my mind as just being like this a day that just like vacuumed out all the volume. Historically, though, right, March, not a very good month for stocks in general. Historically, one of the seasonality, one of the slowest months that you tend to get. And then April tends to be a little bit busier. So not necessarily too unexpected. I say this every year. It's not very helpful now, but every year I always forget how much I hate trading in March. Not going to be the case here this year. It wasn't the case last year. But there was like 2 years in a row where I had red Marches. Like the 2 months of the year that I just got dominated. So maybe it's like a little bit of superstition associated with that. Like the month where I had a big blow up when I first started trading for myself occurred in a March. Okay, pretty low volume, so for us to get a breakout over should not be that challenging. But honestly, a pathetic amount of range here so far. Pretty tight stop you could get on an Apple. I don't think I can convince myself that that's hit the volume standard that we want, right? Like I don't think I can talk myself into that. good, not great. Yeah, Gabe. So there's a couple things, right? Kind of like I mentioned in the strategy video. There's a couple things here, right, that are context based. So an opening range that's 20 points, for example, on the ES, it's probably unlikely that I'm going to get 40 points of follow through here to the upside. So the size of the range is a kind of indication of maybe how, if I want to use other tools to maybe find either breakout or breakdown targets. So if it's like a 20-point range, instead of using the 2R system, it would be like looking at the Bollinger Bands or something along those lines. And then obviously, right, the tighter a range is, then the easier it is for me to be able to actually think that I'm going to get max follow through, right? So if the range to the downside or the opening range is 3 points, well, it's not too unexpected to think that I could get a 6-point move, right? That would be pretty realistic. So that's why this candle didn't trigger as a confirmation. Its range is larger than the opening range. Oh, that's all good, man. All good. No problem answering these questions, right? Like I'd much rather. I'd much rather answer those questions, Gabe, and make sure that you have absolute clarity. Yeah, you might not have the most updated version, Igor. Because here, right, we got a couple different breakouts you can do. So you can play the bearish breakout with volume and range, the bearish breakout with volume, and then the bearish and just bullish breakouts. So yeah, on the bearish breakout, with just the typical volume, yeah, you're hitting it. But for myself, one of the rules I have here is I don't want to be looking for breakouts where the breakout is larger than the opening range. Feels like a little bit of a contrary narrative. Now, in today's example, maybe that's like a kind of a like an over filter, maybe, because the range is so small, right? Less than 4 points. Like it wouldn't be too surprising to see a breakout occur on decent, like more than that. You need a pretty aggressive pullback here to trade this. And you're not getting an entry on this regardless, by the looks of it. One of those weeks. Pretty impressed with Apple. Pretty sick. Yeah, I don't think I've missed anything here that I would have realistically caught yet. Oh. Is Apple the only green name? Wow. Yeah. Time of day is a bit weird though, no? Like they waited 20 minutes to start warming up their engines. Guess so, yeah. Broke down under 900. Who's in the trend line? I think Apple's the only name that's green here, right? Nah. I don't trade these Nancy Pelosi shitcoins. The main reason, right? I'm not interested in like a name like Pacific Northwest. This price action in the last, I don't know, month and a half, like $20 a range. There's not much there. So it sets up better as a day trade, or sorry, as a swing trade versus a day trade. Yeah, it's very close here. Oh, you mean gap closed? Yeah. Still fully inside yesterday's range, right? So we'll call this consolidation for now. The risk reward's awesome, but I'm not sure if this is a reasonable shot. Definitely interesting to start maybe building a position here. Yeah, I hear you. Yeah. I would say that big red candle feels or looks more maybe like exhaustion, right? Versus continuation. But the idea there, right, is more just a risk reward idea. You could be risking a point and a half to make 10 points, no problem. It's really more what it is. It's you can take kind of a lottery ticket shot here. Not saying that's the move or what I would recommend doing, but it would be gut wrenching to try to short this lower, I think. Yeah, could be, yeah. So let's see. So I've got a couple contracts here, guys. Stop loss is low of day. Let's see. I just think the risk reward ratio here is too good to pass up. So I'll take a shot here if I can. Small size though, guys, right? It's a small trade, not going very aggressive here. Remember, guys, right? This trade is very small size. I'm playing like a third of my normal risk, right? Okay, I took a stop there. Let's see. We might be willing to try this again here at some point. Let's see. The shake and bake is annoying. Unreal. Okay, I will be willing to try this again here. Again, guys, small size. I'll basically be willing to risk 800 bucks to make 5K. It's essentially the math I have here, right? So I can take this idea twice, 3 times, and still have a positive expectation of being profitable. So let's see. Again, it would have to be 52, 74, 75 or lower. Okay, so let's watch here. It's annoying that's going to run from here. Man. Just sums it up sometimes. Man, there's so little margin for error with this chop. It's making me laugh. Or making me snicker at myself. So watching again if I can get to 52.75 or under. An overreaction flush under would be nice. Maybe a bit too much work maybe to ask for though. Let's see. Fuck's sake. No, I mean, look, the target here is basically would just be the highs of all the basically sell-off candles. You could also do it as like the previous low of day, right? As maybe like your target. But I don't use the fibs to really map out my profit targets. Even with the ORB, the target is basically 2x whatever the range is. It's not a fib-based level. I use the fibs mostly just to identify my risk-reward zone, right? So I know that if I use the 236 fib level from my profit target to my stop loss, right? Say that that's my profit target. Then I know that if I get an entry that's 52.75 or less, that I'm getting at least 3-to-1 risk reward from that zone. So that's more how I use it versus using it to find my profit target. $10.20, still early. Okay, there's maybe that overreaction flush. So like that'd be more my stop loss here, I would say 52.70-ish. Still be a little bit patient here, trying not to rush this. I'm gonna be waiting here. I'm gonna be waiting. Increasing volume makes me slow down. I'm waiting. Forcing myself to take deep breaths, right? Slowing down. Still not yet, right? Still not yet. So being very patient here still, right? Being very, very patient. I want to see an overreaction flush like the one we got from 78-ish, right, towards 75. I want to see a similar type move here. Where I get that exhaustion and I can be risking a couple points, right? Nice, Abraham. Stoked you're able to connect all your accounts, man. That's awesome. Okay, so let's watch here so we can get that flush. Right, a little fake out through the low would not be unsurprising. I'm being super patient here, team. And like I said, my goal here is I'm risking about 800 bucks. So I need this trade to work 1 in 8 times, essentially, to be profitable. Man, this is the worst feeling. The waiting. basically, guys, right, if I can get this within 2 points of 52, 70, 50 or less, then I can get that 4 contract sizing that I want here, right? And be able to essentially have the risk profile that I'm looking for. And that's 4 contracts per account, right? Not 4 contracts total. So if you're doing a follower system, etc. Accounts, you're asking, Rusty? Yeah, I'm just working on the second one getting funded. So hopefully I have 2 live ones here soon enough. Basically, my goal is if I can add an account once a month, pretty nice. I don't really do things in a rush, so it's kind of my benchmark there. How many do you have, Rusty? I don't know if anyone's got more than Mike, but see, Abraham, you might be close. Nice, okay. Hey, you're close. Let's put it this way. Maybe not once a month is the target, but every time I get funded, I'm just going to add another account until I basically get capped. So if it takes me a month to pass, okay, fine. If it takes me 2 months, whatever. I just don't want to be paying 60 subscriptions at once. It's annoying. So being very cautious here. Yeah, great question, Josh. Or Joshua, sorry. So what I have here set up is I basically trade through two ways. When I trade stocks and I get a setup in that world, then I'm trading through my interactive brokers account. And then when I trade or get a futures setup, I'm doing that through a Apex funded account. And I've got that set up as a copy trader through their Apex investing tool, which is, I think, set up through Ninja Trader. And then you basically just set up like a leader account and follower accounts. So that's how I've got it set up for my futures. And you can, I don't know how many accounts you can copy, up to maybe 20, something like that. But it's all got to be Apex ones. So that's really the objective. Like for everyone in here who's trading right now, that's ultimately the goal, right? Is get yourself 250K accounts going. You trade, say, four contracts a trade, and you got 5 accounts going, right? You're buying 20 contracts at a pop, right? Your P&L is moving $1,000 a tick, or sorry, $1,000 a point, 250 a tick. Like that becomes huge P&L potential. And what I do like about the copy trader, you can do it through the trading view too, right? So when you look into your trading panel and you see your P&L, it only shows you the P&L of your leader account. So to a certain extent, I think psychologically that's easier because you could scale up your trading without your P&L on your screen really changing. So if you're like psychologically get stuck at a number, right? At a big P&L number. Oh man, I can't seem to make $1,000 a day. You might find it easier psychologically to have 5 accounts, right? That make $200. Like that might be easier for you to do mentally versus one account that does 1,000. So I think there's a bunch of little stuff along those lines that gamify that process nicely for us. Did that answer your question, Joshua? I see what you mean. I see what you're asking. So I personally don't do that. I'm sure there's probably a tool that exists somewhere where you could be able to do that. I know through NinjaTrader, you can integrate your interactive brokers. So there could be maybe a way of uh, still using that as like the follower leader system. But the copier that I specifically purchased was like the Apex affiliated one. So although this might not be the case, my base assumption is that it probably works best when it's only using other Apex accounts. What I would say in general, though, your goal with these funded accounts is to turn them into cash and use that to either, create like your 6 month buffer, right, to be able to go trade full time, or to fund like your first own personal 100K account that isn't coming out of your savings. These funded accounts are really, really powerful tools, but they're probably not like the tool that you're going to use for your entire career. I think they're incredible uses of leverage, and they can be, yeah, awesome, right? In that context, I can get way more leverage here than I ever could with my personal account. But the goal, right, is not to make them virtual money, right? It's to try to lock in as many payouts as possible. Your P&L or your money in your sim account or in your funded account isn't real until it hits your bank account. So my objective for everyone, right, would be to try to make that as real as possible while capping their risk. That's what's awesome about these funded accounts, right? You get that asymmetric upside where for $900 you can get $1 million of capital. So I'm pretty chill working with a $900 total stop loss and dealing with that risk where if something happens, okay, that's like my max loss. I don't know if I'd want to then attach my personal account to that, whereas I'd rather, I don't want to say be more conservative, but I like the idea of having like multiple streams of income where if say something happens with an Apex or something happens with a my funded futures, then I'm not fully impacted totally across the board, where I could then still, okay, fuck, I lost my Apex account. Shit happens. Oh, but you know what? I can still trade my personal account and kind of maintain my P&L while I work towards now getting 10 more accounts. But if it's like the double jeopardy, I think that could psychologically be a little bit taxing and contrary to what you'd want to do with these funded accounts. So you'd almost be like hampering your leverage by then attaching your personal savings to it. And I'm not sure if that would be the best use of your money. Man, I hope the Easter Bunny brings us a trending market. Good Lord, one of these days. There's not a, oh, the movie's incredible, but the person himself is a piece of shit. Not a huge Jordan Belfort fan, right? But Wolf of Wall Street, awesome, awesome movie. And when they're first starting to sell pink sheets, right, there's like a line when he does like his initial interview, right? Where the guy's like, "Oh, like if you make a sale for $10,000, like I'll blow you," or something like that. He says, and what the Leo's boss ends up doing, right, is he says the rule of these, commission is keep the money in your client's account because they'll keep spending, but the broker, your job is to make that money real and put it into your pocket, right? Like into, yeah, like you're the one who actually makes it into real cash in that situation. And that's the same way I want to look at the market within that context, right? Is okay, I want to turn this basically into like an ATM. And so my obsession should be about withdrawing money from this as much as possible versus trying to grow these accounts as much as possible. So it's not like you want to turn your 250K account into a 500K account. You want to consistently make your, 10% a month on it or 5% a month, but then add 20 accounts and de-risk that way. Oh, sorry, I don't know if I maybe answered your question or over-answered it, Joshua, but you kind of got me thinking there a little bit. So, happens sometimes. Hey, Ricky. So still, right, if I can maybe get this massive overreaction flush, it could be interesting, right? I don't know if I'm convinced. Okay, let's see, let's see. . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . .. .. .. .. . . . . . . .. .. ............................... Man, it feels like so long since we got a 10-hour win. Okay, give me the overreaction flush here. Come on. Give it, give it, give it. Okay, getting closer. 52.72 is not bad. No rush yet, right? No rush. $10.50. Come on. Trying to get under 52.72. Oh, come on. Trading sucks. Maybe a little bit too picky on that entry target. Ah, great work, Rusty. I've got yeah, you're in great shape here, man. 3 points. This should be your first scale out. Every now and then the market feels like work. This month's been one of those months. So waiting. I don't have a hanging order now at 72. I don't. Let's see. Excuse me. How many contracts did you buy, Rusty? Beautiful. So if you hit, what, 76-ish, you're green on the day? Nice, Dayon. Nice. Good entry, too. what I'm basically trying to highlight here, essentially, is that we did a pretty good job with that first trade. Okay, although it stopped us out and then ran. Nice. What was your daily goal? Yeah. So, like, if we just really obsess over losing small and focus on risk reward ratios and those variables, then it's easy to be green, right? But we just have to make sure that when we size our positions and size our plays, that it's so that you can like remain in control, right? Because what often happens is you could then have the right idea. You might think, hey, this is a bottom spot. But the second you get stopped out on that first trade, what you want to avoid, right, is then revenge trading it or taking the opposite or doing whatever and making like an impulsive decision over that price action, right? So it sucks sometimes that trading can be difficult, but we make it so much easier for ourselves, right? When we focus on locking in those variables. Because if we think about our risk reward, we think about our position sizing, we think about all of those other things, we can literally be green on 25% of our trades and still make a ton of money. But that only works if when you lose, right, you lose in control and you don't like have a mental spiral, right, every time it occurs. Easier said than done, for sure. But it's just a good proof of concept, right? Where small move here today didn't crush us. We're making it back in one move, right? Very, very easy and doable. So that's always the way it should be, right? If our risk management is good, should always be a trade or two away from all-time highs. Always. And I think in choppy markets, win rate is deceiving, right? I think more than anything. So, yeah. It's a funny game we play, guys. It's a funny game we play. Hey, Michelle, if you're, beautiful, okay. If you go into the how to access all services tab inside the Discord, what there is there is my watch list. So if you click that, then you'll be able to save a copy of my watch list where if I add a name or something gets taken out or whatever, you always have the same version. So if you want to do that, you're more than welcome to. But like your goals, man, process-based goals are absolutely the way to do it. I'll take a look at your names here in a sec. But I'd love to hear it, man. That's fantastic. Well, hopefully we get a winning trade one of these days. That's next. any questions here, team? Anything you guys want to go over? I'm not sure if I want to go risk on. I just want some mini eggs. I'm not sure what that says about me craving chocolate at 11 a.m. Would say in general here, day on, for example, right? If you're still in this trade, it hasn't exactly given us the separation higher or as much separation higher as one would have dreamt about, right? Or if this was an A plus reaction, right? I'm not sure if it's quite given us a version of that. So I would either look to, take a little bit of profit here, maybe at that 75 area, something along those lines. But try to get to risk-free on this. Because the longer it takes, I don't know, feels like the timing is wrong, right? And if the timing is wrong, what else is? So I'm not saying that this thing can't go, but I would try to protect myself from some basically execution errors or execution risk by either trying to scale out a little bit or, pushing my stop loss to entry price plus the spread. I think it's a little bit too close to do the push your stop loss up. So this would be more of a protect and trim. Yeah, it's just not. It's not moving a ton. Doesn't mean it can't. Doesn't mean it can't give you a bit more follow through. But it's a time to de-risk here, not to build an emotional attachment. Yeah, exactly. So like it could very much stop you out, fake you out, and then run. We've seen that happen a couple times today. So yeah, hopefully you closed one contract there. Now you can push your stop loss to your break-even price and see if you get big follow through. But worst case scenario, you finish a little bit green. Nice, good, good. And then next target, like 52.80-ish or higher, 52.85 if you want. You can basically run this up 500 bucks risk-free. It's really the goal here now. But nice work, man. Nice work. It's never my favorite trade, but I think they're probably the most satisfying. It's like when you lose money in the first one and then you bail yourself out with your second, but with just like a good process, right? Like because you didn't over commit yourself or over risk yourself on that first one, you kind of have that space for the next. It's like it feels good to be rewarded for making a decision where you remained in control, right? That's ultimately what it is. I mean, up 3 points with even 2 or 3 contracts is still more money than most people make in their day jobs, right? So now you're up 3.5 points, $400 for the day. Couldn't really complain about that here too much. So I know I stress this a lot, right? And maybe it's a little bit frustrating to hear sometimes. But honestly, guys, we have to survive until we can thrive sometimes. So we have to take our $500 wins and our $1,000 wins and our small ones until the market starts to give us the big ones, so be it. But our obsession short term still has to be about losing as small as possible. And the market will reward us with its flow eventually. So yeah, guys, final call for questions here. Final call for questions. I'm not going to stick around for too much longer. It's time for some food and some exercise. Jay, are you funded yet? Good, good. Love to hear that. You're in the you kind of see it the same way. So like to be honest, I'm kind of looking for some confirmation bias sometimes. But it's nice to see like some of the other kind of traders that I say I respect are also feeling like it's time to be a little bit slower. It's not worth the stress of pushing or pressing yet. Yeah, exactly. So well, it makes me feel less insane, so I appreciate that. It is, yeah. It's not about what you can make in one day, right? It's about what you can make in a year. It's yeah, the discipline, it's the process, it's like the gamifying of our self-improvement, of like taming our bad habits. It is 100% a lifestyle, I agree. So like once you decide you're a trader, you're always a trader. Because that commitment to self-improvement can't really end if you want to do well in this game. Fuck, it's the most frustrating way to do it sometimes. Ugh. All right, guys. I think I'm going to walk away here pretty soon. I don't want to see it go back to 52.78. I don't know if my fragile ego can take that here this morning. Just a joke. But yeah, hope you guys have yourselves a fantastic rest of the afternoon. Same deal like always, right? Hit me up outside of market hours if you have any questions. Guys, I have a bunch of one-on-one slots available, so if you want to catch up, chat, talk about your trading, talk about your setup, whatever it might be, feel free to book those slots. Obviously, no calls on Friday, and then back to our regularly scheduled programming on Schmingoose Dingoose, or on Monday. So I hope you guys all have yourselves a great one, and we'll be back at it then tomorrow, right? We'll be back at it tomorrow. So I'll see you guys at about 9 o'clock here, and we'll catch up then. Peace.